Hey guys, stick with me until the end of this video and I'll show you three high growth undervalued stocks you should be adding to your portfolio now. Number one on the list, and probably the coolest company on the list, is Transmedics Group, ticker TMDX. So Transmedics has some really cool tech that's able to keep organs alive outside of the body for longer times than traditional methods. They are highly in demand, and literally possess the next generation of tech. Growth will be driven by broader adoption and expansion of its organ retrieval service. Transmedics is establishing the new standard of care for organ transplants. And here's what some of their machines look like for various organs. So looking at this chart, cold storage is the traditional method of how organs were stored, and only about 2 to 3 out of 10 donated organs were actually able to be used for transplant. Versus with transmedics technology, they're seeing significantly higher, nearly 80% utilization on organs. Here's a chart for you showing the company's impressive fundamentals. You can see from the chart here that revenue's grown at a compounded annual growth rate of 77% a year, while the operating margin continues to improve. Here's just a quick picture I pulled up of the management team, specifically the CEO at a recent expo. It's interesting because you see Italian. It looks like they got that international expansion, and they're gonna probably be beating Q3 revenue estimates with that in mind. Another key point of data is that the CEO actually went ahead and bought 2 million shares of the company on 8/8. Their cash flow turned positive, you can see, for the first time ever. Not profit, cash flow. And with the CEO adding at $127, raising revenue guidance and earnings per share and revenue expected to increase by more than 20%. I mean, this is a buy. But all good things, you got to pay a high price for them, huh? Everyone knows that. Just taking a look at some of these multiples, I will say in their defense, when you look at the trailing, you're saying, oh my God, 81 times cash flow. The cash flow is yielding 1%. That all the returns are eaten up, which you're paying for an expensive stock. Think Palantir, think Tesla. I mean, obviously they don't have the key man risk here like that. It's more of a team, and a product. But one point I would like to make is that you can see the compression of the multiple over time. Specifically, if you look at just say the EV to revenue, as they continue to execute here, a lot of upsides priced in at the moment, but it has always been. I mean, look, it was trading at 12 times EV to revenue. Now it's trading at 6 times as they continue to execute. EV to EBITDA is trading at 73 times and is now down to 29 times. If once they keep executing, the multiple's going to keep compressing and it's just going to make a more attractive valuation. But the catch is that they do execute. Next up on the list is Global E, ticker GLBE. So I've attached their price chart here with trading at 36.74 and a market cap of 6.2 billion. So what does Global E do? They simplify the international e-commerce experience, and let me explain what I mean by that. Think of any foreign country, like in this example here is Luxembourg, and you can start to see the problems that arise with having a company in the US and trying to do business with an international company. You have a language problem, a currency problem, payment methods problem, shipping issues, and then you have to account for all the taxes and now tariffs. As if it's like not confusing enough already. Rules and regulations are constantly changing. Like you can see here, the tariff changes, VAT registration, change to e-invoicing regulations, and you got to stay on top of all this. When expanding your e-commerce business, it becomes unmanageable, period. And this chart demonstrates just that complexity. One size does not fit all. Every single country has different currency, different payment methods, different taxes, duties, and tariffs. It's a nightmare. NCTE to tighten it all up for us in a nice bone package, solving the problem. Essentially, getting all this confusion and spitting it out into one integrated software platform. Here's a 4-year growth chart of Global EU showing their revenue in 2020 being about 120 million and scaling all the way up to about 750 million in 2024. Here are a handful of some other metrics with free cash flow increasing, free cash flow margin steadily increasing, and the annual earnings per share steadily increasing. So it's the same story as TMDX, really. It's not exactly cheap, but they have to continue to execute on their long-term revenue goals and meet their projections and exceed them, and then the multiples will compress. So just to highlight some of the points and not just run over them here. EV to revenue, you can see the compression from 7.25 to 5.5. You can see the compression on EV to EBITDA from 42 to 26. The free cash flow yield is actually in a pretty good range here when you consider the whole historical. I think it's a pretty nice addition to add to the portfolio right now, even though it is a tad expensive. All right, next up on the list, I'm sure you guys know, is Fresh Pet. If you have a dog, you probably have heard of this. It's refrigerated or a fresh version of dog food. It's somewhat of a stickier business than traditional in the sense that once you lock in with a specific dog food, in my opinion, you rarely switch unless it's for, a good reason. Like my reason was switching from kibble, hard, dry, nasty food to fresh pet food that will actually get moldy if you don't eat it in a week. I think there's a real big opportunity to be had here for fresh pet, and as we get into the financials, you'll see the runway that they've had so far. Just to really drill home the point of, how far are you willing to go for your dog? 96% of people would never give up their dog due to food costs, and 92% of people would go into debt to pay for emergency vet care. Continuing on down this graph, we have would reduce their own personal spending to buy quality food for their dog. 86% said yes. Have spent more on their dog's health care in the last year than their own. 61% yes. And would go hungry to feed their dog. 52% yes. Freshpet currently trades at 49.68 with a market cap of 2.4 billion. Pet food's an attractive industry that's undergoing its most significant transformation in decades. This timeline essentially illustrates the advent of kibble all the way through wet foods, all the way to the new simple fresh foods like Fresh Pet. Net sales growth has been really impressive, and they're targeting sales of 1.8 billion by 2027, almost a 50% growth if they hit 1.2 billion here. And they're going to beat this. They've continually beat guidance and outperformed all their projections from 2 years ago in terms of revenue, gross profit, even the margins. They're even ahead of schedule. By 2026, Freshpet believes that the fresh food category will overtake the wet food category as the second largest dog food segment behind dry kibble. Here's a chart of Freshpet's revenue for the last 5 years. You can see revenues increased from about 300 million here in 2020 to just about 1 billion here in 2024. Here's a chart of Freshpet's free cash flow for the last 5 years. Freshpet's free cash flow here has been negative, but is just about to turn positive here in the most recent 2024 period. So the stock's taken a beating recently. It's down 66% year to date. over worries about General Mills' expansion into the fresh pet food category. And just looking here at some of the multiples, they're pretty cheap right now for a company that's been demonstrating this high growth, 2 times revenue or, a 12 times EV to EBITDA, which is the better picture. Don't look at price to earnings. You want to look at the enterprise value, include the debt. Both very cheap for a company with this high growth. And if they hit that target of 1.8 billion revenue in 2027, I mean, they're going to be trading at just over a 1 times market cap for a company growing, 30%, 20% a year in the last couple of years. So I think it's a pretty solid add to the portfolio right now. And that's it. If you made it to the end, thank you and hope you got something out of this. See you in the next one, guys.